Good morning, everybody. Happy Monday, the 22nd of January. I am back to a normal computer, 4 wonderful monitors, no more little laptop, and yes, back to normal. No more dragging things on and off the screen for you. And hopefully it looks a little bigger, prettier, makes more sense. Yeah. Okay. Let's kind of get right into it because we have Snowmageddon 2018 finally here in South Dakota. Usually this time of year it is far too cold here to actually get snow, but now it is warm enough for snow to develop, and so we have a blizzard outside. We cannot see I can only see about a block right now, a city block, a little under that. I got up at 5 o'clock this morning and I almost wanted to take a picture because there was nothing outside. But then went back upstairs at 6:30 and say good morning to my wife. And it was blowing a lot. And then right before I came on, my wife called down to me, ran upstairs, and she said, "I'm not going out in this." and we live in town, which I mean, town in South Dakota is still pretty much living in the country, but I mean, she is only about 6 blocks from the hospital that she's at. She's a psychologist, but I'm gonna drive her there because got the pickup warmed up, and so she'll wait like an hour or a half hour, depending how long we spend together, which is fine. Okay. Anyways, enough personal anecdotes. Let's look at our ideas from last Friday. We were looking at a short on gold at the 1333 area. Oh, you know what? I wanted to adjust something here because now I can be back on camera. Move that prettiness up there. Okay. I'm back with you. Hi. All right. So, oh yes, again, on the Forex portal. Let me go over that. Whoops. So on the portal, make sure that I've got the pull this up quick. well, on the portal, if you look on the videos, the library, you'll see the setup for my charts. I'm going to kind of go over one other thing today as we go through these to kind of help maybe. I'm going to show you something you may be familiar with. If you're not familiar with it, I think it's it's an indicator, but it's also a trading system. And I think I was reminded of it by another colleague. Uh, really wasn't reminded of it. I know it very well. I actually use it, parts of it, but where are you? Oh, there you are. Okay, we'll get to this in a second. Okay, so the euro trade that we had on Friday was a short at 1333 with a stop at 1338.8, which is up here, and 1333. We're still in that area. We have a lot of stuff going on fundamentally that is kind of causing a little bit of a kind of different attitude in how our markets are reacting today, and that's the government shutdown in the U.S. So what does the government shutdown mean? Well, we have learned that the longer it goes on, the less it seems to matter. Some things get a little slower, but for the most part, the essential things that government needs to run are still running. The non-essentials are not, which I guess begs the question is, what's the purpose then? Why are they there? Not to get political. It's just like trading. You get picky about your money, and if you're not picky about your money, if you don't nitpick about where your money goes, then you're not going to last in trading. So you, as a byproduct, you naturally become kind of a fiscal hawk. So, anyways, looking at gold, that trade would still be active. It wasn't a really trade we wanted to get in on over the weekend. There's just not a whole lot of activity. We did kind of gap up at the open yesterday. On the 21st, where are we at? Did we gap down on gold? No, we gapped up, and then we just kind of traded down. We are still this trend line break here we want to watch out for, so we actually could adjust our stop lower, but this angle is still being respected as a area of resistance, and we should not expect a lot of movement today until we hear some more kind of updates on how the government shutdown is going to play out. So we'll see. If they get an agreement, God knows how this is going to play out. So right now, kind of with those unforeseen things going on, unless there's a really obvious kind of setup and move forming, I don't really like to have a position. The gold trade, we may have a nice little quick long scalp opportunity with a break above the 1334. If you're already short and you're waiting, cool. If I was short, I don't trade this pair, but if I was short already, I just let it ride out. That's how you should trade, is you have your stop set and just leave it, or don't have a stop. I frequently trade without stops. I don't. I think that they are prone to get hit more often than not, but I do put kind of a long-term insurance one, 200, 300 pips away. I'm comfortable with that. Euro, that is a lot for most people, I understand. It's a lot of people, lot of pip stop for most everybody. I'm just probably a little weird. The euro trade, we had the euro short at 122.26. If we were going to break down farther, we did gap up at the open yesterday at 4 o'clock Central. We did gap up quite a bit, moved, and we just kind of sold off. And we came back down to the lows of that area, traded back up to the value area again, and now we're trading a little bit back down. Again, not a lot of activity here to look at. We should still see some downward pressure because we are right here. We are at this resistance arc, so we may want to wait to see what happens if we. This is a key area right here where I'm looking at. This is on the 25th that we would see some type of, if price gets this far, if we stay in this range, we will either have an explosive move up and out or an explosive move down and below. So we'll want to see a little bit longer to see how price reacts to this. For the time being, if we get a lot of activity today after we're done, we're going to want to look at a trade that is going to break below the 45. So you know what? Why don't we use this chart and my style of analysis to complement something that might be easier for everybody to implement. The Ichimoku System. You are probably familiar with it. You've probably heard me rail against moving averages and how moving average systems don't work. However, the Ichimoku System is not just a moving average system. It is. I'm not going to get through there's a lot of other terms for how the names of these different indicators, but the cloud, the Kumo, the Kinjin-sen, the Tenkan-sen, those are all names you don't need to know. They're really not important. What is important is to understand how this system works. This is an indicator that is a trading system, or vice versa. It's pretty much standard in any charting software, but arguably the most important thing you want to look at is this cloud. Now, all this is the price action moved forward a certain number of time periods. So if you see this green area here, that's just what this was. All right, you can see that the cloud mimics what's behind it. Okay, now the clouds is really nothing more than, these are moving averages. Okay, these are lines, and then it just fills in a green space. Okay, so if we were to put these on here, that's what they would look like. But I like to not have those lines on there. I just like to see the cloud because that's what's most important to me. Now, how can you find this? You just go to your indicators and type in Ichimoku Cloud. Click that and put it on your screen. All right, and what the default look is going to look like, something like this. It looks like a lot of stuff going on, and it kind of is, but let's break this down by looking over here. You have two lines, all right? You have your conversion line, which is this green line here. So the conversion line is the faster moving average, all right? And then you have your baseline, which is your slower moving average. Just a second, folks. Just to make sure if I get an emergency call on something, I can see it and hear it. All right, and so essentially, the idea is that when the conversion line crosses the baseline, which is the slower moving average, then you have a long bias. You want to go long once that crosses. All right, and then there is, you know what? I'm gonna amend this a little bit and say don't use those. don't use those. That's not important to know what's happening. The only other one that I would recommend using is the lagging span. I like this one. The lagging span is really what's kind of most important. Now the lagging span is like the cloud, except it's backwards. It's thrust back. So where we have the price action here thrust forward, the lagging span is thrust back. And so the Ichimoku system, it's really a great representation. Ichimoku means translated means a look at the market at a glance or at a glance. I'm not sure what the total real term is, but I know it means that it's looking at the market at a glance. It's a really quick way to look at and see how is the market performing related to the past and how is it reacting currently. So the behavior of the Ichimoku system is that when price breaks above the cloud, if it's trading above the cloud, that means we only want to take long trades. When price breaks below the cloud, we only want to take short trades. Now, you could do that every time price breaks above and closes above the cloud here, right? These blobs. But what you really want to do is you want to wait for the lagging span, that black line here. I think it's colored orange. You know what? Let me bring this to I reset settings as default, but I just want to make this thing be default so I don't confuse everybody with what I have going on. Well, that's not the default colors either because I've got a whole bunch of them on here. Anyways, you'll get it. I think the conversion line is maybe orange by default, but that's not really overly important. So we really want to go long now when we have the lagging span breaking out and above the cloud. Did that happen? Sure. Did it play out? No. What about over here? So essentially what we're saying is that when price is in the cloud and when the lagging span is in the cloud, no trades. There's no trades. We are in a squeeze. We could put Bollinger Bands on here and it would tell us that we're in a squeeze. Or we're entering a squeeze. Or that we are in one. Or we're ready to break out of one. I don't know how sensitive this can be on here. Sure, yeah. Tighter ranges squeeze, false breakout back into range. Yep. Now, this is an hourly chart. All right. I like to see multiple time periods. I like to see, not on the hourly, this is the 4-hour cloud. All right. And then I like to see the 8-hour as well. And here's our 8-hour cloud. So right now on these longer time frames, price is still trading above the 8 and the 4-hour cloud. But on the hourly, we are into kind of a consolidative area. So we could very well see price continue in the consolidation before it wants to move up or down. Doesn't have to. As you can see that when price, when it gets, these are the things you want to see. When you see price enter consolidation on all these time periods and then you see a breakout happen, especially when you start to see the 1-hour cloud moving above the 4 and the 8, then you can start to have a really nice bias and move to the top side. And you supplement that with your oscillators. So just like I have a 1-hour, a 4-hour, and an 8-hour cloud system up here, I also have a 1-hour, 4-hour, and an 8-hour composite index. And again, for those of you who have not been here, the composite index, you just type in Constance Brown. It's this one right here, and put it on your screen. And how do you get like a 1-hour or a 4-hour of this? It's really easy. You go to Format, Inputs, and take every value of this multiplied by 4. because we're on a 1 hour chart. We want to see a 4 hour representation of that. And you do the same with the Ichimoku cloud, with the Ichimoku system. See, all these values are just, this right here is the base. This is the default settings. Then this is the Ichimoku default settings, but all the values are multiplied by 4, and this one's multiplied by 8. All right, and I think I even have, yeah, did I do a 20, like a daily one probably too? Sometimes I just like to look at that. Yeah. All right. So looking at this is really telling us what's happening. So we are in a consolidative phase, and what's going on with our oscillators? We're confirmed that this is a kind of a dead market right now. There's nothing going on in the euro. How does that look to over here using other things? You know, we're going to probably more than likely ping pong around here. Okay, we may not see a lot of movement, so I'm not putting in a trade on this. I'm only wanting to go long if we have, and I think these settings are really easy for everybody to set up. I only really want to go long if we have a break above the, where are we at here? Oh, you know what? I also want to see, on my, oops. Yeah, you're still waiting. We're coming up with the end of the time period here and all that jazz, so, okay. So I really want to go long at a break above this resistance arc and a hold above it, or a break below the 45 and a break and a hold below it, which is really kind of coinciding along with what we're looking at in the Ichimoku cloud. So 123.03. Yeah, why don't we say conservatively break and hold above the 123.2. And we want to say, you know, 122.02. We probably want to wait a little longer for that one, but I mean, might breach structure there. Yeah, I want to wait a little lower. 121.69. Well, we'll say 121.8. All right, so that's the euro trade. Again, really muted action until we start hearing some more stuff about the shutdown budget issue. Then we'll see. We'll have more of an idea what's going on. Euro pound. Oh, finally. Oh man, finally. We're getting some nice movement in action. The last trade we had on the euro pound was on the 16th, was it? Yeah, last week. And that was on, we wanted to go long if we got up to, oh yeah, that trade worked out. And we didn't have any trades because we were kind of stuck in that zone up here. So we have some pretty healthy movement down. Looking at our oscillators on the hourly. Well, let's go look at it on the Ichi. Good long opportunity based on the Ichimoku system. All right, we are below the 8. We're below the 4 here, but we're still kind of within this value area. So we could get a pull. We should want to get back short on a pullback to the really the 188.10 area. All right, we would like to see a pullback here to go short again because we are below the hourly, the 4-hour, and the 8-hour clouds. So that's good. That is a very good sign. And we have supportive selling conditions based on these oscillators. The hourly is the only one where we may have missed the boat a little bit. So we want to, and we have a clear break with our lagging span there. So that's good. That's a good trade over there. The other trade we had UJ. We were looking at on Friday. Now this guy is certainly coiling up for move. We've entered a consolidative phase. Again, that's fairly normal. We're gonna want to wait to see for the lagging span to break above the cloud, which won't happen for a while yet, and that may not happen until we enter we want to break and hold basically of the 111 area. Okay. Or we're going to be looking to short on a return to 110.40. How does that look on our other analysis here? Yeah, that's pretty good. That 110.40 actually coincides with, that would be a break of this angle. We had a convergence of these trend lines here and at this level, so it's odd that we didn't get a more active response, but we are holding on this harmonic level here pretty nicely. Again, we have this angle has acted really nicely as support so far. So but up here we're gonna see some tight range trading here. It looks like based on our Gann square. All right, then let's see. We have the New Zealand, the megally overextended New Zealand. I am comfortable shorting here. I believe we actually had a short at this area last Friday. Short at 72, 78 or 732, which we actually are in that area again. So, I mean, that's fine with me. That's 73. Yeah, 73.1. And we'll see what happens if we can get back down to this trend line. It has been acting as support, but we're just really, if we look at an 8-hour chart, we're really divergent on this. We are really heavily divergent on this pair. We had this break. We have a brand new timeline here, so this time cycle. So our stop is pretty tight. Our stop is above the 73.43 zone, above this trend line, but this is a very steep move, and it's near parabolic. So, and a parabolic move is when you have pretty steep angle trend line, but then another one starts. Okay, and then we have, as we keep going up, we keep increasing in angles. So this is looking increasingly parabolic on this move. And when we get to this zone right here, this is generally, because we're in a brand new square in time and price and momentum, we generally will see reversals off this area. So this is the best setup I've seen so far in all the pairs for having a short bias. We are very, it always goofs up when you go back out longer, but we have a very good bias for short momentum. If it doesn't pan out, if short momentum does not pan out and we move higher, then we can assume that we're going to have some monstrous bullish bias continuing. Okay, that this was just a kind of a culmination. But we should see, I was just kind of like counting this out, if we had a 1, 2, 3, 4, 5 movement, we should see a three-step corrective, three-wave corrective move if we're gonna, like use Elliott. Again, I'm not the biggest proponent of using Elliott stuff, but we do have a lot of extended areas here, and yeah, we'll see. We'll have to see what happens with this. On this longer time frame, we could see that we may have a cup and handle formation, so we could see that three-step down, only to come back up to test this area and shoot up higher. But for right now, I am short, and I really only want to get long if we really break this high up here. That's what I'm looking for. Otherwise, I'm short. This is a very extended. Let's see what the others. We also had the Aussie dollar looking at a short as well. Actually, let's go back to the Ichimoku system and look at so New Zealand dollar. Yeah, see how we're very extended. We're not real extended, or we're slightly, or actually on the 8-hour, we're actually considered to be in a buying territory. But on the 1 and the 8-hour, we have sorry, 1 and the 4-hour, we have these developing overbought conditions. And we have what's called, oh, that didn't show up, did it, when I typed that in there? Huh. Okay. Well, right here we have some hidden divergence, hidden bearish divergence. And so what that means is that we have these higher highs in our oscillator. See that? But where are these peaks at? Oops. Higher highs in our oscillator, but we have lower highs in price. So hidden divergence says that this is going to move to the downside. But on the 8-hour, it's still looking fairly bullish for a move. We'll have to see, though. This could have been, like when prices move up a lot or down a lot and they enter consolidation, that can just be a distribution phase and then for further accumulation, or just a consolidation period before the next move up. So we could be in this. But again, because we're in such a tight, elevated areas, I do not have a long bias here at all yet. I'm actually waiting. Give me one moment. All right. Now, so again, we're above the cloud. So really, what we want to do is we want to wait. I mean, I'm already short this morning, actually below here. But if you want to wait until we get higher to see if this breaks up more, or if we want to see if our lagging span is going to come back down. So we are above the cloud. We have not closed a full candlestick above the cloud yet. We want to see a bullish candlestick form above the cloud, and then we can start to have a continued bullish bias. But for the time being, this is still pretty a tight range. Even if we zoom into the 5-minute, it's not a very authentic looking move. It's very I don't know what the word is, meh. But that's just been our move since midnight. It has been a pretty much straight up move, and you can see a pretty good example of on the 5-minute chart. So this is like a 5-minute cloud with a 20-minute cloud, and then a 35-minute cloud. right? Yeah, 35-minute cloud. So just keep an eye on that pair. Any kind of extended further weakness, we should see a nice move down there. The other pair we looked at was the Aussie dollar. And where are you at on here? There we are. That had a nice short setup around here. We're looking at seeing if this angle up here is going to get touched and if it'll hold. Again, it is a very, very elevated direction. We are in severely on the daily. We are way up here in the. We're actually, yeah, we're in the 80s. Yeah, this is a monster overbought zone. And even if we bring it down to the 8-hour chart, yep, really overbought. 4 hours overbought. Yep. So the best shorting opportunities are when we get higher. So the 80-60 zone on the also every day we go farther on here and we move up, we should kind of be happy about that, because at the end of this week, on the 31st, that's actually next Wednesday, but as we get closer to the weekend and then into next week, if we continue to see higher prices, that is awesome, because we are getting into February 4th is actually a big reversal date in Gann's time cycles. So there's a lot of important tops and bottoms found on February 4th. We very well could see the very important tops in a lot of these pairs, and we should be very responsive to those time cycles because they are very sensitive. I'm a Gann style trader, so I value time and momentum levels as the most important. The price action and the behavior of the price action isn't as much of a issue with me. It's the time cycles are what's more important. All right. So, we have one more. Oh, the pound dollar. Pound dollar, similar situation. We're going to see a lot of this weakness in all these dollar pairs because of the budget stuff going on. So, don't expect, again, treat these days like holidays. So if whatever direction things are moving, expect them to continue in that direction. But you can bet your butt that if something comes out where they've reached a deal, the bias is towards some strength for the dollar, because people just don't like a lot of uncertainty with the U.S. economy. You can see the DXY has had kind of its own nasty move here. Yeah, it's just kind of dipped down quite a bit. We're still sitting at that level, but we haven't really, not even really a historical support level, is it? No, broke that. Is that 90.45? Maybe. All right. So enough about the Forex pairs. Just not a lot of great stuff to go after, which is unfortunate. Yeah, get a little toppy there. Bring it back down to the 1-hour chart. Yeah, looking a little top heavy there almost. Yeah, we'll have to see. Okay, cryptos. All right. Yeah, that's what we want to see here. We really want to see some push down further. We want to get to test the 9,000, 8,000 area again, preferably to confirm a double bottom. All right. That would be the most ideal scenario. We you know, I love these resistance arcs. They are so very very um, um, honest. Uh, when price, this is acting as a support arc for, you know, basic price action, but for how we're looking at this movement in time, this is a resistance arc. So we should see price bounce off of these lines, the arc, the top part band and the lower band. We should see price want to be resisted going lower there, which we have seen, but once it breaks through, it is pretty swift, which we do observe. And so to get back into this, we're going to have some equal pressure to move up and out. So we did have, you know, you can kind of, I don't know how you want to view this, but where are we at here? There we go. Okay, I'll go to Bitcoin. Wait a minute, that is not it. Here we go. Okay, so what do we got going on here? Break below the Ichimoku cloud on the hourly, and a hold below it. So you can see that when we broke below with the lagging span, you know, although we can't short it, you know, we can see the behavior of it that reacted very nicely at these levels, and we're on the 4-hour cloud. That's the yellow cloud here. We are below that. So that's a pretty bearish move we've got coming up, but we're still kind of, you know, the 8-hour, we're still really kind of within that value area. We're just kind of poking below it a little bit. What we have below us is the 10,000 area, and we have a supportive arc here. If we break this angle, we should expect some swift a sell-off. And I'm thinking towards the 5,000 level. I mean, it could really go that low, which would be sweet. I really want to. The difference between experienced sellers and inexperienced sellers is how they react to these kind of moves. Long-term, huge bullish bias on Bitcoin and cryptocurrencies in general. Just not concerned about the market at all. Will it get hit by some words about this government regulating this government regulating that, even the U.S.? Sure, but this is more of like an investment than but it is also super speculative and it's fun to trade. So with that mindset, these lower moves and these lower prices are fantastic. I really look forward to them. I really like them a lot, and we should really look forward to cheaper prices to get into things. So, you know, if we're doing a little Elliott stuff here, break this out of here. Just looking at the 1 hour, we have like a 1, 2, 3, 4, and the fifth move down. We should see, yeah, down to 8,000 would be perfectly appropriate. And a longer term Elliott business, we have like a 1, 2. No, that wouldn't work. Or say 1, 2, 3, 4, 5. Yeah, I think I did that right. Again, not the biggest Elliott fanatic. Elliott really doesn't tell you where things are going to go, but it can tell you how far a leg may go. That's really, Gann tells you where things will go, but Elliott kind of tells you how far or how much a move will go. You know, looking at this, the Ichimoku system with our oscillators, we are in great buying conditions again. On the 8-hour, the 4 and the 1, below both of those RSI moving averages. Let's even look at the daily. yeah, we're in great buying conditions on a 8-day, 4-day, and the 1-day. We're just kind of floating around in there, not doing much. So we do have a good bias. Once we get to here, this is on the 29th. That is the end of the month coming up. On the 4th, we have a major Gann date. There is a new moon cycle on the 31st, so that's later on in that Wednesday. And, we just have a lot of fantastic culminations of time, price, and momentum here, which is going to be it's like a jack in the box getting ready to pop. So just be very careful and be aware of that. Again, this is the 1-day itchy cloud, so we just broke below it. Got stopped right on the cloud. It's not a mistake. Stopped right on the cloud. Stopped right on a pivot. Didn't want to go above this angle. But the key here is that this lagging span on the daily is not below this cloud yet. I mean, really, what we may very well see is that we have some range trading in here again before we burst up. But we do have a lot of supportive areas in Bitcoin right here. Just be aware of that. The other pairs, that it's really just the same story, different look though. Ooh, nice breakdown of Ethereum at those levels. Break below the 45. May want to test this area again. But we may be at the 4th leg here of this move. So we have like a 1, 2, 3, 4, and we'll get lower here again. I really don't count these waterfall moves as indicative of an honest one. But it does appear we are either ending if we don't end our down move soon in these major pairs, in like Ethereum and Bitcoin and Litecoin, and I call the major pairs the ones that are traded on Coinbase, the ones that you can convert into fiat cash. If we do not get a whole lot of supportive buying at these levels, we are going to flush. We're going to flush a long ways down, and that is not bad. Options expire. Chicago Mercantile Exchange options expire this week. So again, if you want to think about this, the shorting component of these instruments is a little shady, but the futures market, I do trade futures. I don't trade Bitcoin futures. Really no interest in that. I'll trade equity futures like at the open, like a little bit here, or before. But I didn't do any today. I'm not going to do any today either. Anyways, so Bitcoin futures. So if options expire at the end of the week, then and everybody is wanting to go short on Bitcoin futures, then that means that as we get closer to the end of the week, people are going to want to cover. They're going to close out those shorts, or they're closing. They're going and they may want to change their bias at the end of that expiration, and not just get those shorts covered, but also buy back in long. That would cause a big rise, a big jump. So we should expect to see lower prices in all of these. It's not out of the question. These kind of moves should be. We should look forward to these kind of moves because if you miss the moves down here, you're going to get them again. And I really do believe that the 9,000 to 8,000 area, because it's option expiry, and then we'll get our double bottom, and we're getting close to these bullish conditions in time as well. We really do want price to come down. We don't want it to consolidate higher or consolidate neutral. We do want price to come down. That would be a very good sign. If you already have positions open, I mean, yeah, sure, it looks like it hurts, but you don't lose money until you actually sell. So I have positions open that I've bought all over the place. I mean, farther back before in you know, like September through June, I had buying, but I've had buying at pullbacks here as well, even though this has been a short-term correction so far. We should look forward to further prices. And again, Bitcoin has lost 80% of its value 5 different times in its history. All right, 5 different times Bitcoin has lost 80% of its value. So Bitcoin going from 20,000-ish all the way down to 2,000, 1,000, totally normal. Totally normal. I know that sounds a little wild, but normal is relative, and that is normal for Bitcoin. And so we should actually look forward to getting into moves like that. If we get a big nosedive and a dump at those levels, fantastic. Enjoy it. Also, but again, when we are looking at these kind of when we're looking at Bitcoin and we're looking at this kind of market, you know, it is highly speculative. It is highly volatile. It could just go away at some point. So you really only want to put money in that you're okay losing. Really, any trade, even in Forex, I assume that the money that I put in is gone already. All right. I want to make sure that I am comfortable with that money disappearing. All right. I'm comfortable with the amount of risk I've taken and that I won't be able to get it back. If you have already determined that the money you're risking is gone and already out of your account, then you don't have to be afraid of it disappearing. You just have to be okay with saying, I'm okay risking $100 here. I'm okay to put $100 and let it disappear to see if I can make $300 or $200, or if I can make $50 on my $100. If you have determined that that money is gone already before you have decided that that's what you're gonna risk and you're okay losing before you even put the trade on, you really have started to succeed at the market. Because I preach this a lot that 90% of this career is mental. It's how you're reacting to the dollar value or your account value going down. It's amazing how many times people, and I'm including myself in this because I made this mistake frequently, is I've determined to have a certain bias. I've determined to have a trade set up, and I go to do it, and I've spent so long analyzing, and I know that the probabilities are in my favor, and I put in the trade, and then it goes against me, and I decide to get out, only to see in a couple days that I would have been fine. So you are your own worst enemy, and you just have to try to avoid causing yourself losses all the time by being comfortable with losing. All right, be comfortable with the risk you're taking, and that assume that money's gone already, and then it won't bother you. Okay, kind of went a little longer today than usual. Let's just do a little quick kind of run over our here we go. Let's look at these currency pairs again. The dollar yen, kind of not doing much there. The gold dollar, right at that trend line here. Seeing what happens. Don't have a trade on it. The euro, still stuck around there. The euro pound, we want it to do a little pullback so we can go back short again. Looks like that did happen. That's nice. The pound dollar, very extended. The Aussie, oh wait, here we are. New Zealand dollar, that's extended. We were short. That's playing out so far. And same with probably, I would imagine, yep, Aussie dollar's got the same thing going for it. Okay, so we have hidden bearish divergence on here as well. On the Aussie dollar, we have, on the hourly, we have higher highs in our oscillator, but on these peaks, but we have lower highs on our major peaks on price. Also, I do not like these. I keep saying that I do not like these because I think it's like chasing straights, but scenario could play out. New Zealand dollar probably has similar structure. Sort of. But, yeah, not really though. We'll see though. We will see. Anyways, those are the trades. You know, trade. This was a short from last week too, I think, right? Yeah, we were short at 88.7 on this, and we kind of have returned back to that area. It's still a good short. The Aussie dollar yen, Aussie yen pair. All right. Anyways, I'm babbling. Cool. So we have some trade opportunities. We have some important areas that things are sitting at. Again, we have no deal on the U.S. government. We're still on the shutdown phase. So be careful of your trading today, especially if you are going to be long pairs that are against the dollar, because the odds are that if something comes out where they've reached a deal, then that's going to be bullish on the dollar and bearish for the other pairs, at least in the short term. So just be very cautious with your trading today. And yeah, I think we're going to have a really fun week. I'm looking forward to this week. It should be pretty exciting. I'm glad to be back to South Dakota and out of the woods of Michigan, even though I do miss my in-laws. Uh, but yeah, trade smart, trade safe, and don't trade afraid or hopeful. And we will see you all tomorrow morning. Bye bye.